Hi, for those of you who don't know who I am, my name is Josh and I'm from the Good Brothers Trading Academy. And today we're going to be talking about ticker symbol NIO and the huge move it put into the market. And we're going to tell you what position we took. Now, again, this is ticker symbol NIO. And the biggest takeaway from today is you hitting the like button for us and subscribe to our channel. We're brand new to YouTube, so don't forget to turn on the notification bell. So every time we upload new content, you'll be first to be notified. Now, the serious takeaway is NIO was building this pattern sideways. And what we want to understand about NIO is that we had this incredible move up, and the stock has been really realistically, it's the only competitor to Tesla. So a lot of people love the idea of the electric cars, and so we're all kind of looking at the next Tesla, okay? And they're coming out with some cool stuff. You have Nikola, but that's a joke. And we have this strong push up in the market, so it makes a move higher. We also get this long consolidation sideways, the flag pattern being built. Now, what we want to also look at is we want the understanding of why it's building the pattern where it's building. We have this support here. So let's shrink this chart down a little bit and get an idea or a bird's eye view of what's going on in the market at this point. We have this double top. So we get this nice impressive move up. We get a double top right here, a double top right here, and we continue to sell off, right? And so when we get the support, or when we find support here and here and here, so now we get an idea of where our top is at. Okay, we get an idea where our clear top is at and our clear bottom is at. And what I really like is horizontal patterns. And the reason why is because of that particular reason. We know where to be buyers at. We know where other buyers are going to step in, where they are going to give us protection in the market, and they will step in to keep the stock price up. We also know where sellers will come in at. Now, notice where we double topped at. It's in the same exact zone or area that now we are finding a new flag pattern. So we're coming up. Here's our new sell zone up here. Here's our new buy zone. And so the stock price continues to build the flag. We get the strong push up, right? And then we get the stock moving sideways. And what's neat is we started kind of building some higher lows. Now, what we also want to pay attention to is what's going on inside the bull flag. Okay, so we get, again, with that strong move up, we get the reversal candle. So we know that there's sellers here. Now, I mark out my zone by blocking out and making sure that I highlight so I don't get my lines of support and resistance confused by any means. Now, what I like to do is I go, this is a demand zone. We know that there's demand in the market down here. We know that this is a supply zone because that's where sellers end up. There's an overabundance of supply, so they sell the shares either to cover their position, or we have short sellers coming into the market to drive the stock price down, right? But what I want to show you is we have this reversal pattern right here. So anything that's halfway down the original candle, so if we have a big bullish candle up and then a reversal candle down, anything past 2 or past the 50% would be considered a reversal. And then we find buyers down at the bottom. So now we start building this horizontal pattern again. We got the lows and we got the highs, okay? And each time we get in to highs and lows, and what I liked about this particular stock is I started seeing it as we get the strong move up, and the range is tight on it. When the range is tight, that tells me we're more likely to get a move quickly than if the range is a little bit more, if there's bigger whips to that range, if there's a lot of whipsaw action. And so what I like is seeing the strong buying pressure. We end up grabbing the dip down here on this day right here. We did have to hold through the pain. Well, we bought contracts, and the reason why I bought contracts is I'm wanting to show people that it doesn't take a whole lot of money to get started in the market and to make wonderful profits. You can get started with just a couple $100, a few $100, and there's still a lot of potential growth to be made, especially with using options. Now, I trade equities as well, but I do like trading options for the simple fact of the matter is that you can use it in your favor to hold on to the position and still limit your losses accordingly. We were down, our stop loss, believe it or not, was down here. And this brings me into the next subject too. I did not stop out of the trade. And the reason why I did not stop out of the trade is because I knew, and if we look at a bigger time frame, for example, the weekly chart, If we were to start breaking down underneath this indecision bar's low. Now, I have a lesson all on the indecision bar just by itself, talking about how we play the technicals on the indecision bar. And the reason why I did not stop out of my trade is because that's the low of the indecision bar, and I wanted to give it time to give me a recapture. If the 3 hour time frame, for example, was going to give us a recapture in this price zone, I would stay in the trade. Now, when I would not, and where I would cut my loss, was if the trade came down, built a pattern sideways, and then started making its move lower. If I would have seen the wicks getting rejected off the bottom of the zone, I would have been out of there. If I would have seen if I'd see the zone being held like it did, and where the opposite direction of the stock started taking place, where we started getting buying pressure again, then I know that the trade is still on, and I'm still in the trade. I'm still good. Now, I wanted to add, once we got this push up higher, I actually wanted to add to the trade. I was really anticipating another dip buy down here, a lot closer. And so as sellers are being put into the market, as we start seeing these wicks, we also start to understand that if we can hold price level 22, around this 22 price zone, if we could hold that zone, then that's where the shorts would be squeezed out of their position. Any sellers that were in the trade expecting a move lower would be squeezed out of their position. The other thing I like is this reversal pattern right here. We have a clear reversal. We have a clear consolidation sideways, and then we get the drop. That to me shows that a lot of shorts got piled into this position, and what I was waiting for when I saw that 3 hour pattern happen, because when we get a 3 hour pattern, that shows direction. Now, if we go down to the lower time frame, for example, an hourly chart, I'll go to the 30-minute. That's going to give us the double bottom. And so we can start seeing how this reacts. Now, one of the biggest things that I wanted to bring out in this particular trade, this green zone that we drew in, this is clear on the 50% retracement on the indecision bar. Very important, especially coming to down to the indecision bar, and realistically any bar. But we wanted to know where the stock would start finding buyers and sellers struggling at what point. If it got past or under the 50%, this would start to show that the bears were in control of the stock at this time. If we stayed above the 50% level, or the 2150, or between 2130 to 2150, this would show that the bulls would regain control of the stock. So once I saw that the stock price, it did worry me because we got the close underneath this price zone, and I was wondering about that. But what I liked is we held it, and we come back down and we tested it again, and we got a double bottom. We actually put in a higher low setup, right? So we get a push down, a relief bounce up, another move down, and then a higher low, and then a lift off. Now we want to see a horizontal pattern happen, and if we could hold this zone, and we could see a horizontal pattern happen, then the more likely than not, we would see the top side, or at least the bottom side, and retest this $22 area. And for hopes that we would get some type of a consolidation in this area, because now hoping that all the sellers would be now out of the trade, out of the stock, because the more times that we knock on that resistance, that means more sellers are continually piling in. That also means that everybody that didn't get out of their position originally when the stock price was moving higher, and they did not sell, they did not take profit, each time the stock sells off and they find buyers and it pushes it back up into that area, they now have a chance to exit the trade for the same price that they did originally. So they generally do not try to make it get more money on it. They just want to get out what they originally had. Have you ever been into a trade where you're up, like, let's say $100, and it comes down, and now you're down to 50, and you're like, I don't want to sell at $50. I used to have 100, and so next time it gets up to $100, how many times are you greedy and you want to see if it's going to break past that? Well, also, on the flip side of that, how many times does it get up to like $75 or $80 or $90, or possibly to that $100, and you're like, I'm good, I got my $100, I'm ready to walk away? The same scenario happens here. So once all the sellers are done selling their position and the buyers continue to push the stock price up, we now start to get higher lows. We also see that the sellers are out of their position, knowing that we'd have a little bit of psychology in the market, knowing where buyers and sellers are struggling. If we can figure out where our supply zones are at and our buy zones are at, we have a higher probability of success in the market, understanding where buyers are trapped and sellers are trapped in their positions. What we really liked And what happened was we had an analyst upgrade today, this morning early, and I don't remember what bank. Um, yeah, I don't want to say. I don't remember what bank it was, but what ended up happening is the stock price gapped higher, and I told everybody if we could hold 22 and there wasn't any sellers there, and we could stay there, and we could find buyers in this 2190 up to 2220 or so, then we would most likely make that move higher. Well, gapping above at this point, what ends up happening is we have all these sellers that are trapped in their position, if there was any more sellers in the market for the most part. And now we have positive news on the stock telling us that there's an analyst upgrade. The stock price obviously ripped higher, right up to 24, and I ended up selling right on the open, right as it opened. I didn't care. I was in money. I'll post my P&L up now, and we just bought 3 contracts. The reason why is I wanted to show everybody the contracts. I only had $360 invested. Okay, and we made 125% return on our money. The reason why is because if you're patient enough in the trade, and most people when they're starting out don't have a lot of money, where they're below the PDT rule, and they have to they're only able to trade 3 times a week before letting the fund settle. Now there's hacks and there's way around it. You could split your money up in different accounts. You can use a cash account, etc., etc. But for the most part, we're limited to 3-day trades a week. And so it's good to pick which stocks are really going to put in a good move. Picking and choosing the patterns that you see value in, these horizontal patterns, buying the lows and selling the highs, and waiting for these breakouts to happen. The more patient you can be, the better you're going to be. Now, getting back to where I should have stopped out at, possibly should have stopped out. If you're the type of trader that continues to stop out of the trade and all of a sudden just to see the stock price continue moving higher, then first off, write in the comment box that this happens to you, and maybe even share something that's happened this week. We're traders, bad things happen to us all the time. It's nice to talk about. The other thing is if you're caught in this scenario and you're doing that, chances are you're trading with too big a size. You can still, and I would recommend if you're new, trading with like 1 share to 5 shares, just until you get the understanding of what's going on. Stop making emotional decisions and stopping out of the trade. The second thing is you don't understand the technicals at this point. If you're stopping out of your trades and just to watch them rip higher, now this could always happen, of course, and it happens to novice traders and more experienced traders as well. But if this is continually a problem for you and you can see that, then what needs to happen is first lowering the share size. Second, learn the technicals better. You need to learn where buyers and sellers are struggling. You need to know where you're wrong in the trade. If you know where you're wrong in the trade, you won't be nervous anymore. And if your dollar value is not too high that you've invested into the stock, you will also not be worried. So let's kill that immediately. You don't want to be nervous in the trade. Cut the share size down, learn the technicals. I have a lot of videos discussing and going over technicals, and I believe that's a huge portion of the market. Whether you trade off news, I love trading news. You still got to know the technicals. Just don't buy on news. Learn where you're wrong in the trade and continue. If you haven't, though, please, my goal is to get to 1,000 subscribers here on YouTube. That way I can go live. I want to break down tickers you guys see value in, and so I can help out the community. Leave your questions and comments in the comment box below. Also, you could leave tickers in there if you want me to break down specific tickers. I could do so. And other than that, be sure to hit the like button, share the video, and I'll see you in the next video.